Hi, I'm Will from Link, and in this video I'm going to give you all the information you need to get up to speed and making the most out of link reporting. Now what you can see right now up on screen is the time code, so you can pause this video and scrub ahead to the section that you need to check out. Otherwise I encourage you to stick with me through the full video, and that way by the end of this video you'll be an expert on link reporting. So let's get into it. Now the first thing we're going to talk about is WIP versus job reporting. Now firstly, WIP. WIP stands for work in progress. Now work in progress is the unbilled time and costs that we have on a job or against a client or against a certain category at any point in time. Now in Xero Practice Manager you can get a work in progress balance, but you can't get a report. A report shows you the movements that have occurred over a certain period, and we're going to look at this in a lot more detail once we get into the WIP movement report. So we can report on performance based on our work in progress, or we can report based on our jobs. Now the challenge with using jobs for reporting is we have two very different types of jobs. We have open jobs and we have completed jobs. Completed jobs are really good for understanding what has happened and how can we learn from what's happened. So we can look at things like write-offs, we can look at profitability. Really, really important that we analyze our completed jobs and see how they perform, because that's going to indicate where we can make changes in future. Now for our open jobs, we're looking at something different. We're looking at what budget is remaining, or what milestones are coming up, or what are our due dates. So between these two different jobs, we've got two very different sets of information we're looking for. Open jobs, what is happening, how much budget do we have remaining, whereas completed jobs, what has happened, what can we learn from this. So when we're trying to report on things like how are our clients performing, or how are our team performing, or which way is a category performing, it's very hard to look at job reports, and it's because we have both open and completed jobs mixed into the same report. And off those two different types of jobs, we're looking for different sets of information. That's where WIP reporting is a lot more powerful, because we can look at the movements that have occurred over a period. So when we're looking at clients, when we're looking at our team, and when we're looking at anything that isn't specifically job related, we really do want to look at WIP reporting to get that information, and that's how we have built link reporting, to give you the visibility into your work in progress and not just focusing on those jobs. Here we're going to talk about profit versus write-offs, because these are the two metrics that we want to be focusing on to understand where we can improve our performance. So if we're looking at the performance of a staff member, or we're looking at the performance of a client or a job, we can look at write-offs and we can look at profit. And those two metrics allow us to understand whether we have done well or we have not done well. So let's look at write-offs first. Now write-offs are the difference between your billable amount of work you've done and what you actually managed to invoice. So let's say, for example, we put $10,000 of billable time to a job. If we were only able to invoice $8,000, we'll have a $2,000 write-off. That means we wrote off $2,000 of time on this job. So that's really important to understand, because we're going to have a billable rate that we assign to a staff member, and when they work, we expect them to be able to bill all of their time. That's why we set their rate like we have. Now, if a staff member is writing off time, that indicates to us either that staff member is not justifying their billable rate if they're writing off across all their jobs, or if there's one job that has a particular write-off, we could say, well, that job was underpriced. So write-offs give us some really incredible insight into where we can put our attention in terms of improving our performance. Perhaps the staff member needs training, or perhaps that job they worked on was underpriced and we need to review our quoting methods for those types of jobs. So write-offs are a really, really good metric to use. Profit, on the other hand, that relies on the costs we have entered. So profit is calculated by taking the total invoiced value and subtracting the total costs. Now, costs in financial accounting are black and white. So financial accounting being profit and loss. So a cost is what has left our bank account. So that is an absolute cost. We're in project accounting, which is what we're doing here. Costs can be manipulated based on how we enter the data. So when we can either enter a direct cost rate for someone's time, or we can enter a burdened base rate for someone's time. A burdened base rate will have an overhead apportionment, and that changes how we represent our profit on our jobs. So let's say we're paying someone $30 an hour, we could say that is the cost per hour they work, or we can also say, right, we take all the overheads in our business and we apportion those overheads across all of our staff, which comes down to an hourly rate. So when we do that, we could say, right, well, if that's $20 per hour, well, that person is now $50 an hour when they work on a job, and would calculate our profit based on a burden base rate. So the challenge with using profit is that it's not an absolute profit because of the way we can manipulate that and how we enter our data. Because we can go down the rabbit hole, for example, of saying with our cost rates for our overheads, do we include the administrator's time as part of that? Do we not include our productive time? So we can actually start really manipulating those costs, which manipulate our profits. So when we're looking at profits, it's really important to understand that if we keep things across the board, it's fine. We want to know, was job A more profitable than job B? That's fine. But you can't rely on profit as an absolute fact. It's not black and white profit when we get into project accounting because of how we're driving our costs, which is where write-offs tend to be a better way to look at information, because that is expectation versus reality. If we expect someone to bill $200 per hour and they're only able to bill $180 an hour, we could say that they wrote off $20 of the time that they did, or 10% of their time on that job. So that's the difference between profit and write-off. One last thing about costs and profit is when we're looking at our staff reporting, we ideally want to be using a direct cost rate to calculate their profit and also their ROI. So if someone's paid $30 an hour, we want to be having the $30 an hour as our cost for an hour's worth of time. Whereas when we're looking at our client reporting on the profitability on our jobs, we want to include that overhead rate. So we want to have that burden base rate showing to calculate our profit. Fortunately, in link reporting, we give you the ability to put in your direct costs for staff and also your overhead rate. So when we're looking at our staff reporting or our team reporting, it's going to use just the direct cost. When we look at our client or our job reporting, it's going to bring through that burden base rate, and you can see the direct versus overhead costs in our tables. So we do give you that flexibility between the two methods, but that's profit, that's write-offs. I hope that all makes sense. So now we're going to jump into link reporting, and I'm going to take you through how our data sync and reconciliation works. So let's jump in and we'll check it out. So here we are on the dashboard in link reporting, and as you can see when you log in, you arrive on this nice green field here with a couple of alpacas. We wanted to create a nice peaceful experience when you first log in rather than bombarding you with a whole lot of reports, because the rest of the system is about reports. So we wanted to create something a little bit different here on the dashboard. Now what you can see on the dashboard here is a time and date stamp, and you can click on that and it says your data was successfully synced and reconciled at 6:15 p.m. on the 28th of July 2021. So that lets me know that my data was absolutely perfect as at that time and date, and we sync that every night for you. Now when we say reconcile, what happens is we sync your data into link reporting, then we run all of our calculations to figure out what the WIP balance is, then we check your WIP balance, what's against an XPM or your WorkflowMax, just to ensure that we have all of your data and there are no discrepancies in here. So that is what that green check means. It means that your data is reconciled. Now let's take a look at our WIP reports. So if I go to practice, we have both our WIP movements and our WIP performance reports. We're going to start on WIP movements, which looks at a single period that we can view in multiple different groupings, and then finally our WIP performance, which is going to show us over multiple periods. Okay, so all reports are structured this way, where we have all of our criteria up the top and a run button. You can export reports once you've generated them, you can load them, and you can schedule them to be sent to your inbox on a recurring basis. And we're going to touch on schedule and send a little bit later. Now what we've got here first is we select our date range. So what is the date range we're interested in running the report for? So by default here it says the current month, so that's going to give us our WIP report as at today. We can also select last month or the last 12 months is another really good one as well. And you can see what the dates are over here. Now, we also have our grouping. So we have our group by. That's going to be how we want to group this report. So this report right now would show us our current month's WIP grouped by our job manager. If I go show more, you can see then by job info. Job info is your client name, your job number, and the job name. So let's run this. I'm just going to run it for the current month, grouped by our job manager. So as you can see, this is the date here. So from the 1st of July 2021 to the 28th of July 2021. So as at the 1st of July, this was the opening WIP balance for all of our job managers. So you can see here, Aaron Atkinson, $167.31, and Billy Burns here, just over $37,000 of opening WIP. So then you can see the amount of time that's been added to Billy's jobs in the period, the amount of disbursements added, how much has been invoiced, and any write-ups and write-offs, and our closing WIP. Now what's really interesting about this formula here is you can add, if you add from left to right, you arrive at your closing WIP balance. So if you take your opening WIP, you can increase your WIP balance by adding time to it. You can increase your WIP balance by adding disbursements or costs to it. You can reduce your WIP balance by invoicing it. And then when you do a wash up on your job, if you have more work in progress than what you invoiced, you'll have a write-off. And if you've invoiced more than what your work in progress is, you'll have a write-up. So as you can see here, invoiced and write-offs are negatives, where your write-ups are positives. So if you add from left to right, you'll arrive at your closing WIP balance. Now what we can do is we can expand any of these groupings here to investigate this further. So if I click on Billy, you can see these are all the jobs that Billy is working on, and then all of the WIP movements. So you can see this job here for Aaron's Audio Limited, 3,700 was the amount of unbilled time and cost at the start of the period. We've added 3,383.70 of time, and that gives us our closing WIP balance here of 7,146.90. So again, if you add that amount of time to that WIP, that's the WIP that you finish this period on. This is another good example down here. So if we opened the period up with 1,549, we added just over $5,000 of WIP, but then we invoiced 4,371. We now have 2,565 remaining. Now what we might have done at the end of this period, we might do a WIP wash up. If we do a wash up, what's going to happen is we're going to then see a write-off of negative 2,565 arrive in this write-off column, and we'll have 0 as our closing WIP balance. So that's what happens when we do a wash up on a job, is we take any remaining WIP and then we write it off. Now another really cool thing about this report here is you can sort the table by any of these headings. So if we're interested in our closing WIP, so if we want to reduce our WIP balance, we can sort the report by closing WIP just like this, and it's going to give us our closing WIP balance at the top here. So Ricky Robinson has the highest closing WIP balance, or the highest WIP balance right now at 124,000. If I expand Ricky, you can see these are the jobs that make up that balance. So Cry No More Limited is sitting here with $5,635 of work in progress. So this is how we can reduce our WIP balance, by sorting the table and then reviewing the clients or the jobs that have higher WIP balances. So what we're looking at here is our current month grouped by job manager. Now let's look at some other ways we can look at this information. So if I change this to last 12 months, and then I'm going to put this second level as client. Rather than really being interested in this closing WIP balance, what we're going to be interested in now is perhaps what our write-offs are, or how much we've invoiced. So if I run this report and then sort it by invoiced, you can see very quickly which of our job managers have invoiced the most amount, and with Ricky Robinson at the top here. So I can expand Ricky and see which clients have made up the most. You can see King Jellybean Limited, $30,000 of revenue. So that's a really, really good client for us. Bulls and Pools Limited, again, really good client. So this is a really good way to see which of your clients are bringing in the most amount of revenue. Another thing we might be interested in is our write-offs. So if I click on write-off here, Bruce Banger has generated $137,000 of write-offs. So I can expand this and then see which clients. So it looks like Moats, Goats, and Cheesy Cheetos, those ones are causing quite high write-offs for us. So to investigate this, really simple, I can click on the $10,000. That's going to draw me down to a transaction summary grouped by job. So very, very easy to start investigating these write-offs. So it looks like this client consistently having write-offs here. So this is something that we probably want to have a chat to Bruce about. These ones here that we're running a lot of time off for, want to make sure that we can reduce that in future years. Now, I'll show you another cool thing here is rather than grouping by client at that second level, we can look at our category. This is going to give us some insight into where their revenue is coming from. So I'll sort by invoiced again. And this is the exact same data, nothing's changed, except when I expand now, I'm going to get a different breakdown. So rather than seeing by client, I can now see by my job category. So compliance makes up almost 330,000, followed by advisory, others. So if you see others in any of the reports, it means that they haven't been allocated a category or a client group or something along those lines. So that means that there's been nothing allocated. And then finally, time and cost at the bottom here. So really cool to see where our revenue is coming from in terms of our categories. Now, the last thing I'm going to show you here on the WIP movement report, a really cool one, is to run the report by current month, which is going to give us our current WIP balance, by job manager, and then by job state. So I want to know if there's any bottlenecks in their workflow. So if we sort this by closing WIP, I can see Ricky Robinson here with 124,000. If I expand that, I can see that tax return filed has got $68,000 of work in progress. So straight away I can see that and see that we really need to figure out why we haven't invoiced $68,000. Another big concern for us is archive. We've got $28,000 of WIP sitting in archive. That indicates either the job hasn't been invoiced by accident, so it's missed its invoice, or it's been closed without having a WIP wash up done. If that's the case, that $28,000 needs to be sent over here into this write-off column as a negative, which will wash it out to zero in our archive. So it looks like we've missed our WIP wash-ups on this one here. So really important to investigate this. We can easily click on it and see all of these jobs here that haven't had their WIP wash-ups done, or we've forgotten to invoice them. Another way to do that is we could also run a report. We could use the filter, Ricky Robinson, and then look at, quickly do that. So if we were to go, our job manager is Ricky Robinson, and we're now interested in our, let's go job info at the bottom, and we'll put our job state here. So we're gonna see our job states. So these are all gonna be Ricky Robinson's jobs. And this is gonna give us a really, really good insight into where our WIP is sitting. Here we go. So there's that 68,000 that we saw, tax return filed. If I expand this, I can see all the jobs here that are waiting. So it looks like we've actually finished these jobs. We're gonna get some really nice invoicing at the end of the month because they're all sitting and filed now. If we go down to archived, however, these are the ones that have been archived and have actually missed their invoice. So it looks like that one there could really do with an invoice. So we're gonna be careful we're not gonna miss that one. So that's just a bit of an overview of how we can use the WIP movement report. It's a super, super powerful report, being able to investigate our work in progress and just get a general understanding of what's happening in our practice. Now, the next thing I'm going to show you here is the WIP performance report. This shows us our WIP movements over 12 months. So what we saw in the previous report, being the WIP movement report, is we looked at a full month or a full period. So you could see here, if we looked at last month, we'd see these figures here for our totals, but we're breaking it out by job manager or by client or however we use those filters. This, however, gives us this beautiful bird's eye view over 12 months, so we can see how we're tracking with our closing WIP balance over 12 months. We can also see what our billable time is. So you can see we had a quiet month here in January, which is expected, and a really big month here in March. So just a really, really nice way to see over 12 months, how are we tracking. You can see over the past 12 months, we've added $3.1 million of time and invoiced $2.9 million. Now, another thing I want to show you here is this WIP multiple, really good metric to keep an eye on. The WIP multiple is your closing WIP balance divided by your time and cost entered in the period. So what this says to us is we've got 1.58 months worth of WIP sitting in our closing balance. That's quite high. What we ideally want to do is keep that under 1, which means we're turning our WIP into cash quickly. If we see this at 5, for example, it means that we've paid wages on 1, 2, 3, 4, 5 months of work, but we haven't yet invoiced a cent of that work that we've done. So the higher your WIP multiple gets, the more you're needing to trade out of an overdraft to pay your team. So you want to keep this as low as possible. In a perfect world, you can even get that into a negative. So if you've got negative WIP, it means we've invoiced more than the work we've done, which means we're billing in advance. So negative WIP's great to see, but getting above 1 is generally highlighting a bit of a risk to us because our WIP's starting to get out of control. The last thing here is our write-up percentage. That just lets us know how much time and cost we're writing off in relationship to how much we're entering within the period. So you can see here 9.9%, so we're writing off 9.9% of our time and cost. So for every $100 of time that we enter, we're only able to invoice around about $90 of that time. So between the WIP movement report and the WIP performance report, you get this beautiful visibility across what's happening in your practice, and the more time you spend in that WIP movement report, the more familiar you'll get with it, the more powerful it'll be. So now that we've looked at our WIP reporting, we're going to look at our team reporting. So if I click on team, we've got team performance and individual performance. So if we were wanting to look at a single period and look at multiple team members, we'd look at this one here. If we're interested in a individual performance over 12 months, a bit like we're seeing here with our WIP performance report, we'd go to individual performance. And what's cool is we can click on an individual's name within the team performance report to drill down to an individual performance. So really good idea to just start up here. Right, so when you first start using link reporting, you may not have any grouping set up. So as you can see here, I've got function, role, team, and office. This is how we're going to group our report. Now, later in this training, I'm going to take you through how we set our groupings up. But for the most part, if you're not seeing anything sitting in this box here, you want to watch the section on groupings. So I'm just going to hit run, and what this will do is it'll show me my performance of my team based on last month. Excellent, so we can see our partner, admin, billable, and manager. And then we've got all of our metrics across here. So we've got the amount of billable time done by our partners, the non-billable time done by partners, the total time they've worked, the leave taken, and our productivity. And if we expand this, you can see these people that sit in this grouping. So what I'm interested in here, however, is our billable team. So I'm just going to start by sorting this report by our net write-ups. There we go, and it's going to give me my billable team. So now I can go and investigate this. So we've got Curtis Cruz. Let's look at Curtis. So Curtis did 109 billable hours, 25 non-billable, total time worked 134, and took 25 hours of leave. So really solid productivity, up at 81.2%, which is 16.63 higher than the rest of the group. So if we go show more, you can see that our comparisons here are group average. If we're interested in comparing how Curtis performed against how he did last month, being May, we can choose last period when we run this report, but the default there is your group average. So Curtis has done 18,581 of billable WIP. So that's the amount of billable time, or the value of his billable time he's entered in June. And then he's also been allocated $4,347 of write-offs. And you can see it's net write-ups is the column heading. So a negative indicates that it's a write-off. So we then have how that compares to the group average. Now, bear in mind that this is the percentage. So if I just go show more, there's a couple of fields that are not showing here. So it's actually the net write-up comparison is against, if I just hit save here, that's against the write-up percentage. So let's just run this one more time. And then sort by our net write-ups like we had before. There we go. So the percentage of time that Curtis wrote off was 23%. So 23% of his time was written off, which was 16% higher than the rest of his group. Now we've got our revenue. So our revenue is calculated by taking the billable amount of WIP done in the period and subtracting the net write-ups or the net write-offs. So $14,000 of revenue we could recognize against Curtis in this period. Now the billable amount, that's been pulled straight from that the WIP data within this period. The net write-off's the same. Now, the revenue is not what was invoiced. So if we were to run this report, our revenue will not line up with what was invoiced in that WIP movement report, and that's because we can't attribute an invoice to a staff member. So let's say if we raised a deposit for $10,000 and we put it against a job, we could say, right, well, that job had a $10,000 invoice. We could say that client had a $10,000 invoice. We could say that job category had a $10,000 invoice. What we can't do, however, is say that staff member had a $10,000 invoice because they haven't done any time. We can't recognize them for that revenue. So what we do instead is we recognize the revenue by taking the billable amount of work they've done and adjusting by the amount of time that was written off in that period. So let's say with that $10,000 deposit, let's say Curtis did $6,000 of work in June. We'd see $6,000 appear in the billable amount here, which would be $6,000 contributed towards his revenue figure. Let's say the next month he does another $6,000 of billable WIP. So we'd see $6,000 appear here, but we know we only invoiced $10,000 for that job. So when we do a WIP wash up on the job, we'll have $12,000 of billable time. We only invoiced $10,000, so $2,000 gets written off. Therefore, we'll see $2,000 arrive here in the net write-ups, adjusting down to $4,000 of revenue for that second month. So we got $6,000 of revenue in the first month, $4,000 in the second month because of that write-off. But what we've achieved is we've had our revenue over that period of time lined up to exactly what was invoiced. So that revenue figure will reconcile eventually to what was invoiced, but there's just a bit of a timing difference the way we recognize our revenue here, because it's the billable WIP adjusted by the write-offs rather than what was invoiced in that actual period. Really important to understand that point. We then have the cost amount. Now the cost can either be pulled from what's in your Xero Practice Manager or WorkflowMax, or it can pull the rates that we set up in link reporting. We'll be covering base rates a little bit later in this training here. So your cost can be entered in here, and this is where we get our profit figure from. So our profit is our revenue minus our cost gives our profit, and our ROI. So our ROI, as you can see, we've got little hover over hints here, revenue divided by base cost. So if we take the revenue, being $14,000, and we divide it by the cost, being $3,600, we get an ROI for this month of 390%. So that's a really high ROI. Anything over 300% is looking really good. Now our average hourly rate is our revenue divided by total time worked. So our revenue is 14 grand, divided by the total time, which was 134, gives us $105. So what we really want to do is help our team increase their average hourly rates, and they can do that by being more productive, because if you're more productive, it means you're creating more billable WIP, which will increase your revenue. We also want to be writing off less time. So if we increase our billable WIP, so we could really push our billable WIP up, but if we're writing off all that time, it's going to drop our revenue, which means it's going to drop our average hourly rate. So to improve our average hourly rate, the two big focuses are improve your productivity and reduce your write-offs. We're going to see a big improvement in our average hourly rate and also our ROI. So those are the figures that we want to keep an eye on. Now we can drill into any of these figures to investigate them. So we might want to look at Curtis Cruise here. If I click on this 4,300, that's going to drill me down into all the transactions that make up that amount. So I can see down here, $93, not such a big concern. $800 here for Mags, Trash Bag Limited. We did a cash flow budget and forecast. Looks like we wrote off a bit of time. So we want to probably have a chat to see. It's actually not so bad, 820, but these are the sort of things we want to do, is see, is there a bit of a pattern here? This one here, Sam Stations Limited, that's a big write-off. So we probably want to have a chat to Curtis and see, hey, is there anything we can do next year to look at reducing the amount of these write-offs? Excellent. So what we can also do in this table here is we can add and remove fields. So like you saw before, I can remove cost, I can remove profit and ROI. So I can remove these and then hit save, and what that's going to do is it's going to give me the information that's a lot more shareable, because we may not want to be sharing things like our profits and our ROIs and our costs with the rest of our team. So you can remove the fields, give you a reduced report here, then we can export this and send it out to our team members as a PDF. Really simple, just like that. Go PDF, that's going to send it through that email address. Or if we want to get clever, and we'll be taking you through this a little bit later, you can schedule this to be sent through to a team member's inbox on a recurring basis. So what we're going to do is, I'll show you another drill down here. So if I was to click on Curtis Cruise, go right, well this month that we just looked at here for Curtis, I can click here and that's going to take me down to an individual summary. That's going to show me 12 months of Curtis's performance. So you can see here that Curtis, that's the month we just looked at, being June. There's this 390% ROI that we saw, and we might go, was that a particularly good month, or was that pretty common for Curtis? You can see here his average over 12 months is 409%. So Curtis is really performing well. You can see his cost amount here coming through at $45,000. He's bringing in what do we got here? Revenue, $186,000 of revenue. So Curtis is absolutely in line for a pay rise right now, doing really well. Productivity's looking sharp, writing off 13% of his time, still a little bit of time. We could probably look at improving, but absolutely at these numbers we're seeing here, we should probably look at giving Curtis a raise, maybe up to about 50K. Well, depending on what your pay structure is, of course. But yeah, Curtis absolutely due for a pay rise here. So it's really good to see this, this data coming through. Now, one thing I want to point out here before we start making some really big decisions based on this information is we want to make sure that we are washing our jobs up correctly, because we may have the situation where we're invoicing and you have 2 lines on your invoice, annual accounts, and then you may have another one called general queries. What is very common is when people invoice is they'll remove all of the time off general queries and put it all into annual accounts. What we end up doing when we do that is writing off all of our time on general queries and doing a big write-up on all of our annual accounts time. So you got to think about when you're invoicing, how are these write-offs getting applied, and it's important to understand that. So if you are invoicing and making mistakes around how you're doing your wash-ups or doing your final invoices, that's going to impact the what you're seeing here for your team. So before you start making really critical decisions around pay rises off this data, really go back and make sure that you have been doing your wash-ups correctly to make sure you are getting accurate data in here. So the next report we're going to look at is the practice performance report. Now the practice performance report is exactly like we're looking at right now, but rather than looking for a particular staff member, it's going to show your whole practice in one report. So let's jump into it and you see what I mean. I'm just going to run for last month, and that will also show me the 11 previous periods. We're going to see a full year here. So this is our practice's performance over 12 months. So it shows our billable, non-billable, total time, the leave taken, and our productivity. So really interesting to see how our productivity changes throughout the months. You can see November was not the best month. We had a pretty good month here in May, quite productive, and we're averaging 52.78% for the whole 12 months. So some little changes in productivity have really big impacts on the total amount of billable work you're doing. So then with the total billable amount of WIP that we've done, so this is the billable time we've done in the period, so 3.1 million. And then we've got our net write-up. So this is going to give you a different figure to what you'll see in the WIP performance report, and that's because this is only looking at time write-offs. Where we're looking at the WIP reports, that's also going to include your disbursements in there. So that's your total amount of write-offs on time. So it's just over 10% of time is written off. So big opportunity there. We're writing off about 300K, or 10% of our time. So if we can reduce that by just 5%, we're looking at adding, in this business here, probably about $170,000 to the bottom line, just with a 5% improvement in our write-offs there. And we'd do that by using, some of these reports, the team performance report and the client profitability report. Those two reports really, really powerful. And also this and the service profitability report. All the reports basically really good for reducing those write-offs. So you can see your revenue, total cost, and bear in mind that cost will not line up to what's in Xero as a wage bill. Remember, this is project accounting, not financial accounting. Those are going to be based on the base rates you've entered multiplied by the total time worked. Our ROI, and finally our average hourly rate. Now that's a really cool metric to keep an eye on. You want to be looking year on year, is our average hourly rate improving? If you've got a good average hourly rate, you want to make sure you're maintaining it. So just something to keep an eye on. If you start seeing your average hourly rate start to drop, there's going to be a number of reasons for that. One is you're hiring too many administrators. You could find that you're not as productive as you used to be, or you could be writing off more time as you bring more clients on. So a number of reasons. We really don't want to see this trending in a downwards direction. So really cool report to keep an eye on that. Cool, the next thing we're going to look at is our client report. So we jump up here, we've got our client performance report and our client profitability report. We click into this one. Now this here, it's important to point out, this is a job report. It is not a WIP report. So when we're running this for the past last month, it's going to look at our completed jobs last month. So we're about to do a bit of a restructure of how this is working. So this client profitability report is soon going to be called the completed job report, and we're going to move it up and under here. So it's going to sit in this this job heading here. So we have open jobs and completed jobs. That will bring you into this report here. We're rebuilding the client profitability report off WIP data. So, and there's a number of reasons for that, but essentially, if we run this report, let's say over 12 months to look at our client profitability over 12 months, if we haven't completed a job for that client, they're not going to show in this report. However, if we run a WIP report over 12 months, it's going to show you all clients you've entered time for. So it's a much better way to look at the data. So this is still a very, very valuable report, but the name itself is not correct. This should be a completed job report. So if I was to run this report over the last 12 months, that's going to show me my completed jobs over the past 12 months grouped by client. Fantastic. So as you can see on the left-hand side down here, I've got all of my clients, as that's the top level grouping. And you can see the actual time entered for the client, total cost, billable, invoiced, write-up, write-off, all the way through to profit and average charge rate. Now, average charge rate is an excellent metric to be looking at, but really important to point out once more that this is looking at completed jobs. So if we wanted to look at the total amount we've invoiced for a client, or the total billable amount, within 12 months, it's better to use the WIP movement report, and that's soon going to be the basis of this client profitability report. So just really want to emphasize that. Now, if I click on 10,000 feet limited, it's going to give us a list of all of the jobs that make up these totals here. So these are the jobs that were completed within this period. And you can see here, I'm just going to show you another really cool way to use this report. So I'm going to sort this by average charge rate. And what that's going to do is it's going to allow me to see very quickly I can see here that this client here, I've charged for these, for Candice and the Carrot Picker Limited, $33 an hour. This one here, Photography Raptor Limited, $37 an hour. And you can see that the ones with very low average charge rates also have very high write-offs. You can see we're writing off 80% of our time. So if I click on to, let's say, the Candice, the Carrot Picker Limited, these are the two jobs, and then I can expand again, and it's going to draw me right down to what's happening. So I can see the billable. We only invoiced $100, or despite having $625 of billable time, which gives us some pretty low average charge rates here. So this job itself, $25, and this one looking a little bit better, but when we balance it all out, the average charge rate, as you can see, it's taking the invoiced over actual time. So we invoiced $135, and we've done 4 hours to generate that, which gives us a average charge rate of $33. So really, really powerful report for understanding which jobs didn't go so well. So what would be a really good idea is be running this report. I've just run it over 12 months, but even if you run it every month, jump in and see what jobs have been completed. You really want to be focusing on these ones here with really low average charge rates, because we can't work at some of these rates. If you go to the very bottom of the report, however, you're going to see these are your best ones. So look at this one here. We've done invoiced $12,000 on 21 hours work, which gives us $562 as an average charge rate. So this is where we find our best clients, and at the very top is where we'll find our worst clients. So what we often find is you'll find a lot of your best clients will subsidize your worst clients. And this is just the benefit, again, of link reporting, is being able to see this, which clients are sponsoring which clients. So if we can really address these ones here, anything under sort of $100 or $150, these are where all your write-offs are. So if we can address that and figure out why this is happening, we can then put measures in place so it doesn't happen again, which is going to have a massive, massive impact on your bottom line. Not only that, is you got to think about all this time that's written off, right? So let's say we wrote off $2,590 here. That could be, how much time? That could be sort of 30 hours work. Now, the staff member working on that job had to find 30 hours somewhere in their life to catch up. So every time you see a write-off, it's not just affecting money that you weren't able to bill or time you weren't able to bill, it's also putting pressure on your team to try find extra time to deliver that job along with all the other jobs you've given them. So write-offs are a double-edged sword. They not only affect your how much you can bill, but they also affect the well-being of your staff, because it puts a lot of pressure on them. So really important when analyzing this stuff. So now that we've looked at the client profitability report, the next report we're going to look at is the service profitability report. So if we come down here, we've got service profitability. Now, this is exactly like the client profitability report, but rather than looking at our clients, we're looking at our tasks. So this allows us to see very easily where our time is going, which tasks are incurring write-offs. So if I run this, it's going to group by revenue stream here. You can see that I've set my revenue streams up, and that's done through the mapping, so we can map our tasks to revenue streams. And I can see under advisory, these are all my advisory tasks, and this is showing me the write-ups and my average charge rates. Now, this report is a job report. Just want to stress that again, that we're going to be rebuilding this report here to run off WIP data, and that way you'll be able to see what we actually invoiced or what our actual billables were in this 12-month period. But at the moment, this is running off job data. So it's only looking at jobs that were completed in this period and the tasks on those jobs. So again, we're going to be moving to a new environment soon that's going to be all off WIP data. But at the moment, we can rely very much on these write-offs and also these average charge rates. So if I was to sort this report by average charge rate, you can see here that FBT returns is our highest average charge rate, and it's under compliance. So our average charge rate is actually higher on our compliance than it is on our advisory services. And that's probably because of the amount of write-offs we're having. So you can see we're writing off 31% of our time on our advisory. So you might think that advisory is the high value activity. Well, in reality, we're writing off so much of that time. So if we go into compliance here, you can see where is our annual accounts. So we're averaging $149 an hour for annual accounts, which makes up a huge amount of our revenue. So most of our work is annual accounts. We write off around about 10% or 9.71% of our time. So we really want to be focusing on reducing our write-offs on here, because it's the largest amount of our write-offs. And we also want to be focusing on our advisory, because what's our biggest advisory? So we're doing a lot, like 56K on that one there. So HR support and we're writing off 35% of it. So our HR support, we're actually charging $73 for. Cash flow management, $32. So straight away, we're starting to see some really interesting figures around where our opportunities are of reducing these write-offs, because it looks like these first two tasks doing really well. Business planning, cash flow forecasts. Those are really profitable tasks to us. If we go down the bottom of this list here, we've got some big problems that we need to address. So service profitability report, super valuable. Again, just want to stress that this is built off our completed jobs within that period. We'll be moving towards an environment soon where this is running off our WIP data, which just means that we can rely a lot more on the billable and our invoice columns, because they will reconcile back to what our actual billable was for this period and our actual invoiced. But what we can rely on, however, is very much the write-offs and the average charge rates to give us some really good information and insight into where we can focus our efforts. Now let's take a look at our job reports. So if I come up the top here, we've got jobs, we've got open jobs, and soon we're going to see completed jobs under here. So that'll be, if we go to client profitability, this report here is soon going to be sitting up here as a completed job report. So just point that out one more time. Now, with the open job report, this is showing us all of our jobs that are active and being worked on. So if the job has a completed date, so if you change the job state to completed, it's going to take it out of the open job report and put it into the completed job report, which is called currently the client profitability report. Now, what we can do is we can run it by job manager, or another cool way to run it is by client. And then I'm going to hit run. This is going to show me all open jobs grouped by client. So here is a list of all of our clients, and then if we expand the client, you can see these are the open jobs for that client here. Now I'm going to take you through the really cool metrics that we've got. So we've got estimated time, actual time, and remaining time. This is a really cool way to manage your open jobs, because what we want to do with an open job report is find jobs that are at risk. That's our key objective here, because we've looked at our client profitability report, which is our completed jobs. We're looking for low average hourly rates. We're looking for high write-offs. We're looking for low profit. Those are the things we're looking for to identify problems so we can fix those going into the future. Same with the service profitability report. What can we learn from what has happened? Open jobs, however, we want to identify risks so we can jump on them before they come big write-offs that we find in these other reports. So we need to find a way to identify these risks. One way to do it is to enter our estimated times against our tasks. Then we can track it against what the remaining time is on those tasks. So if we sort this report from remaining time high to low, sorry, that's low to high, which is what we're wanting anyway. What you're going to see, probably a few jobs that haven't been entered correctly. So it looks like there's a bit of a problem with that one. So we can ignore this one at the top here. And we're really looking for jobs that, I'm going to find one that's got some really good data in here to look at. So Larry's Lawn Feeders Limited. I know this job here has some really good data in it. So as I can see here, my estimated time is 25 hours and I've done 100 hours. So I've actually gone 75 hours over budget. So if I click into this to drill down a little bit further, you can see all the tasks and costs. So these are all the estimated time, so 25 hours. And we've got the actual time. So this is actually, major transactions. There's no estimate against there, which means there's going to be no budget allocated to it. But as you can see, what you really want to be doing is when your job managers pick up and start working on a new job, make sure they check all of the estimated times on the tasks and make sure they represent how much time they think they need to complete it. And also pop a budget in to that budget field. So you can see there's 23,000 entered in here. And it's taken that 23,000 and it's apportioned it across all of these tasks relative to their estimated times and their billable rates. So if we have a higher billable rate on annual accounts than we do on Xero conversion, it's going to get a higher apportionment relative to the time in there. So all you need to worry about is populate your estimated times and put that budget in there and you get this nice apportionment across there. What that does, it gives us some more reports that we can use to identify risks. So one we can use absolutely is our remaining time. As you can see here, we've gone well over time on our annual accounts. Now, what we can see here is our budget. Our budget for annual accounts was 13,000. So that was going to be, you can see 14 over 25. So it gets a good chunk of the budget, or most of the budget goes to annual accounts, but potentially that wasn't entered correctly because we've got a lot of time that's gone to major transaction that actually hasn't had any budget allocated to it. But anyway, you get the concept there. So our budget gets allocated, then we can see what our billable versus the budget is. So if we come over here a bit further, if we have any write-offs here, you can see what we've actually invoiced. Some of this time might have been written off. You can see actually we've entered 6,000, we've written off 3,000 here for annual accounts. So we've actually got $3,000 of work in progress. So our total WIP on this job right now is 9,000. So it's quite a high WIP balance on this job. So again, being an open job report, we want to be able to identify these types of things very easily. So we've got $9,000 of WIP on the job. So our remaining budget is 10,000. So our remaining budget, if you hover over here, it's the budget less the billable. So our budget was 23,000, back over here, and our billable is 12,000, giving us a remaining budget of just over 10 grand. So this is a really, really good way to manage which jobs are at risk, because if we sort this report by remaining budget and all of your budget's been captured correctly, you can very easily see at the top of the report either which jobs are being worked on and don't have budgets. They'll show at the top because they'll highlight red, because if the budget's 0 and we've put 10 grand of time there, you'll see 10 grand over budget. So straight away you'll see which jobs don't have budgets, which means they're not being managed properly. But you're also going to see if we have legitimately gone over budget, where are we going over budget? So this is a really, really good field to be using here. And it's used by many of our customers to this report here to really identify where issues are in their jobs. Now what we've also got here is days till due. If the task is completed, it'll get a checkbox, or it gives you the number of days until the task is due. Now projected write-offs is a really interesting metric. What that's doing is it's looking at, as you can see here, the billable versus the budget at a task level. So if you go over budget at a task level, like we see here, you'll see a projected write-off start to show. Now if you go under budget and check the task as complete, it's going to give you a projected write-up. So what that means is as you work through the job, you can keep really, really close tabs on whether you're going over or under budget at a task level. So this could be a really, really good way to sort the whole report by projected write-offs. And if we're going over budget earlier in the job, it's going to show very quickly here, because this is predicting how much we're going to be writing off on the job. At the moment, it looks like we're projecting a write-up of 3,300. So although we've actually gone over on this management accounts here, it's being buffered up by all of these other tasks. So in order to get this report working really, really nicely, all we need to do is enter our estimated times against our tasks and put that budget into that budget field, or we quote the job, which will achieve exactly the same thing. And then I'd manage your jobs by exception by using remaining budget, projected write-offs, or if you want to keep things nice and simple, you can use remaining time. Now what we're looking at here is a full list of all jobs. So you can actually get quite clever as well by going show more. And we've got some really, really good filters in here. So you may want to just use a certain job manager. So you might go job manager, includes, we put Ricky in here, for example. And that means we're only going to see Ricky's jobs here. So we can actually start sharing this information by using schedule and send, or by giving Ricky a login, and then Ricky can set up a report and go save, and then go just like that. And then when Ricky jumps back in, rather than having to pull up the filters again, very simply just go load, Ricky's open jobs, load report, just like that, and it pulls up all the predefined criteria. And that way Ricky can look at managing her jobs by exception. So extremely, extremely powerful tool if you take the time to enter the data correctly. Now the next thing I'll take you through here is your mappings. So we've looked at all the reports now. Now we're going to look at some of the settings in here. So first I want to point out that under settings here, we've got a report builder. Just stay out of there. That was the original version of link reporting, and we're going to be removing this very soon. I'll just click into it to show you. But essentially, this is how you can create pivot tables and things, but it only works off the raw data in Xero Practice Manager. It hasn't been run through all the very clever algorithms that were written to achieve these reports here. So for the most part, I'd recommend staying out of here. That's why it's sitting under settings. Where your settings are currently located are actually in your menu here, and then go down to mappings. So what we're going to look at here is our staff mapping. So if we click on here, this is how we group our team into groups. So you can set up new ones by going manage staff criteria. You can see that we've got all of them there. We can go add more, go create a team, and then we just very simply, if someone is still working for us or someone is working for us, just go and put the grouping that you want them in there. So for example, partner, admin, billable, I think we've got some managers in here, and you can create roles, teams, whatever suits. So if you put someone's name, or if you put a grouping in against one of these boxes, it means they'll show it in the reports. If you want them to be removed out of the reports, very simple, just remove them out, or just don't put them in any of these boxes here. They won't show up in your team report. So you can see Alison Anderson there has got no groupings against her name. So if I go run a team performance report, you'll see that she won't be showing in any of these reports. So there's no Alison in there, no Alison in there, no Alison in there, and then find under manager, there's no Alison. But if I did want Alison to show up, very simple, all I need to do is jump into staff mappings, and then let's make Alison a partner, hit save. That's instantly going to update for me. So if I come back in here, I'm just going to hit refresh. Now we should see Alison sitting under the partner heading here, just like that. And as you can see, Alison Anderson, all zeros here because she's got no time entered. But as you see, she's actually got a write-off here because even though she no longer works for us, a job may have been washed up in this June here, which is why we're seeing a write-off. So we actually click into this. You can see these jobs here, we've done a wash-up in June for her. So she's no longer with us, but she can still be having write-offs posted through. So what you may want to do if someone is no longer with you, but we still want to be reporting on the write-offs that they're bringing through, we can put them in a category such as like no longer here, and then maybe after 12 months, then we could go to remove them completely. So just some options there. Okay, so the next thing we're going to look at is our base rates. Now we've actually got two rates in here. We've got our overhead mappings and we've got our base rate mappings. So our base rate mappings are for our individual staff. So Aaron Atkinson here, if I click on the eye icon here, this is the hourly rate that we want to assign to 1 hour worked by Aaron. So let's say, for example, if I want to put Aaron's rate up to $32 an hour in March 2020, and I click the little green box, it's going to auto select across there, then I can hit save. And you get a little notification saying it can take up to 24 hours for the calculation to update. So what's going to happen is overnight, when all the calculations are run, are going to be run with this new rate that's been loaded. So it's as simple as that. So you want to go and put all of your team. So if I just go back to where we were, this is all of your team, and we want to go through and enter the base rate against all of your staff for the relevant period. Now, something to keep in mind is that this is obviously sensitive data, so you want to be careful about who you give access to link reporting once you have entered these rates. Now, the next rate we want to look at is our overhead rate. So this is going to be used for all of our staff reporting here. This is our direct cost. When we run a team performance or an individual summary report, it's going to use these rates we entered here to calculate their profit and calculate their ROI. Now, when we're doing any reporting that's at a client level or at a job level, it's also going to include these overhead rates. So we just have one rate for the entire business. So this is the hour, this is the cost per hour that we assign to an hour worked by any of our team members. So the best way to calculate this is to get all of the overheads for your business, that's excluding any wages. So that's your power, heating, rent, insurance, all of those things. And then we want to divide them by the total number of hours that you pay for in a year. So if you have $500,000 of overheads and you pay for 10,000 hours per year, you would have $50 per hour would be your overheads in here. So it's quite easy to calculate. Go through and figure that out. And if you do get stuck, let us know in support. You can let us know in the chat just down here. Ask us a question, we can help you out with that. But your overhead rate will be used for your job and your client level profit reporting. But your team performance reporting will only be using that direct cost rate that we enter into our staff members' base rates. Right, so the last setting to look at is under here, and it's our task mappings. Now, task mappings allow us to create a revenue stream. So as you can see here, I've got my various revenue streams here, and then go through and allocate a revenue stream to all of these tasks. So for example, cash flow management, that's advisory. These are all been done correctly already, but just go through and allocate them, each of the tasks to a revenue stream. Then we're running a service profitability report. You can group that by revenue stream, and then you can start seeing where your time and your write-offs and your average hourly rates at a revenue stream level, then drill into it to see the tasks within these revenue streams. So really, really cool set of mappings to set up. It's just, again, going to improve the quality of reports that you are getting. So here we're going to look at schedule and send. So I'm in a team performance report right now. I'm going to show you how we can schedule reports to be sent to inboxes on a recurring basis. So the first thing we want to do is think about what report do we want to send and on what frequency. So let's say I want to send a team performance report as a PDF to all of my managers on the 5th of each month, summarizing last month's performance. So I know I want to run a report for last month, right? So that's going to bring up my date there. And then I want to group by function, and I may want to add some filters in here if that's relevant. Probably more relevant in your WIP reports. And then go add and remove fields. I want to make sure that I'm showing the right information because I may not want to show cost. If I'm sending this to managers, ROI is fine, but I don't want to be just having a blatant cost figure in front of all my staff here. So I'm happy with all of my fields, then I can run the report. Fantastic. So this is the report that I'm going to be sending to my managers. Now, what I'm interested in is my net write-ups. So I'm going to sort the report by net write-ups. Brings me my highest write-offs at the very top. So I can see billable, Curtis Cruise will be sitting at the top of the report this month. And then, so now I've sorted it. I've put all of my criteria in and I've chosen my period. I'm going to hit schedule. Give the report a name. I'll call it team write-off summary. Put all the email addresses in, so you might want to put all your managers in like this. Now the start date, what is the first date I want to send this report out? So I want to send it on the 5th of each month, and the 5th is already passed for July, so it's going to be the 5th of August. The frequency is going to be monthly, and I want to send it as a PDF. So what's going to happen is this report is going to be run on the 5th of August, and it's going to look at what the date is, which will be last month. So that's not going to send for June, it's going to send for July because it's going to look at today's, the date the report's being run, and then look at that quick select being last month. So that's looking good. So when I save this, I'm going to get a report on the 5th of August for the month of July. And it's going to be sent, it's going to be sent monthly. Almost missed that, just like that. Hit save. Perfect, so that's going to be scheduled to my inbox now. Now, if I want to edit or delete a report, really simple, just go to load, and you can see down here, you can load the criteria, make changes, and then save it, or really simply, I can delete it, just like that. Perfect. So that is schedule and send, really simple. Just decide on what information you want to be sending to your team on what basis, and then go and schedule it, and make sure that you utilize add and remove fields and filters and sort the report. Really powerful when you send a report. Make sure you use that sort, because if you're trying to send, like, say, a WIP report, you want to probably sort by your closing WIP balance so you can really draw attention to the thing that you need to be focusing on. So the last thing to talk about now is support. If you do get stuck for whatever reason, or you just need some help, the bottom right-hand corner where you're logged in, you'll see there's a little chat icon. If you click that, you can send us a message. If we are online and available, we'll answer you right then and there. If we're not for whatever reason, that's going to create a ticket in our support desk, and we'll follow up by email as soon as we are available. Alternatively, you can email us at support@linkreporting.com. That'll create a ticket for us in our support desk, and we'll get back to you as soon as we can. So we really understand that the better your processes and data in Xero Practice Manager or WorkflowMax, the better reports you're going to have. So it is our objective to make sure you have all the tools and resources you have to have a really good experience on our products. So do reach out if you do need anything. I hope this training has been useful, and I'll see you in the next video.